statistics that are all doctored and massaged.
But we had growth in GDP. If we carry it through this quarter, it'll be a full year of
growth
GDP growth.
in GDP is very difficult to measure because depending what you calculate as your personal consumption expenditure deflator, you get different figures. I don't think that GDP has increased. So I think it's about flat. And certainly it's lower than it was in 2007.
So do you expect what other people would call a double-dip recession? You think it's just a giant U here?
I think that the economy will settle down at the lower level of, let's say, equilibrium than what we had prior to the crisis.
So in other words, the new norm going forward, it's a different type of growth, correct? Because the growth that we had way back when was not
It will be much lower, in my
real.
opinion. Now, you understand, when you have huge fiscal and monetary stimulus, and at the same time you have private sector credit contraction, you can get huge volatility in economic and financial activity. So for 3 to 6 months the economy may look good, and then suddenly it looks bad, and you move from inflationary expectations, as we had in 2009 when people sold off government bonds and they bought equities and commodities, and now in the last 3 months you have a strong dollar, and you have again a strong bond market and weak asset prices. So we've moved back into a more deflationary expectation environment.
Well, one asset that we've been watching very closely is what's been going on with gold, because even with all this increased market volatility, certainly on the equity side, you're seeing gold prices also move down. It's kind of an interesting move. Is everyone just afraid to hold any type of asset class, and should they be afraid?
Well, I mean, gold has moved down from the peak, but it still performed very well over the last 18 months or since the beginning of the year and so forth. And, I mean, we just have corrections once in a while. Now, I believe that it is conceivable that gold goes down somewhat more. But in general, when I look at all the asset classes in the world, and I look at the forthcoming disaster that I envision in the next few years, then I'm quite happy to hold physical gold.
What else? Other sovereign debt, Canadian, Norwegian?
Well, I think that in Asia we have equities that are not terribly expensive. You could buy now a basket of Singapore shares or Thai shares with a dividend yield of 5 to 7%. I mean, I don't think they'll go up right away, but at least you get a 5% dividend yield every year, so you're kind of paid to wait. Same in Hong Kong.
I wonder what you think government should do. You know, the typical response now to a
They should all
crisis.
resign. Go away on a holiday.
Well, I don't know that that would help much more either, would it?
I think it would, actually.
Total anarchy?
Well, anarchy does not necessarily mean a bad anarchy. You could have a free market where people would understand each other, and rather than hit each other's head, they would trade with each other and do business with each other without too much regulation. I don't know. I believe government should be there because they have to say you should drive your car on the right-hand side or left-hand side of the street, and I think they should have a police force, and I think they should do foreign policy. But beyond that, they should stay out of the economy, and this is something Mr. Obama and these clowns around him don't understand. They think they have to intervene in every sector of the economy. They're going to destroy the economy. All right.
And I actually want to ask that to Marc Faber. I mean, do you think we're going to have a sequel?
Credit Crisis 2?
Credit Crisis Part 2?
Yeah, I think eventually the sovereigns will default, or a lot of sovereigns will default. It's just a question of when. I think in the US they can print money easily, so it can be postponed for an extended period of time. But eventually it will happen.
Better if we just let them default now.
Well, certainly in the case of Greece, they should have let it default. I think it would have been a better solution. In the same way, I think it would have been a better solution to let AIG go.
Right.
But it eases the pain, you could argue, if they buy themselves time and then they restructure the debt in a calmer way.
I agree with you. Listen, I've been drunk so many times in my life. The best way to postpone a hangover is to keep on drinking. And so you just drink and drink and drink, and eventually you collapse.
So in the long term, we're all dead, is what you're saying.
In the long term, as I always said, we're all doomed. But in the meantime, because of the volatility in the markets, you can make money. The key will be to know, and that is, as Goethe says, genius is to know when to stop. And when you stop, how to allocate and where to allocate your assets.
Well, so let me ask you, because you've been so right on many significant calls here in the last couple of years. So in terms of the big volatility swings to the upside, I mean, how big could those moves be? And what will tell you that that's coming?
Well, I think they could be huge. I mean, really, we have had a
20%,
lot of...
30%, what?
Well, I mean, as I said, on the stock market from here, I don't think that we will exceed the April 26 high right away.
Right.
We could have a rally and then again a correction period, and then eventually when more money printing comes in, because really what the Eurozone has done by monetizing, they've given another opportunity to the Fed to monetize as well, because the dollar has been strong. And so it's a race in the purchasing power of paper money to the bottom. And the only assets that will for sure keep the purchasing power are precious metals.
All right, precious metals, you heard it. Marc Faber.